Of high growth rates in the IT industry may possibly be over. That's the word coming in from Genpact's president and CEO, Tyagarajan. CNBC TV 18's Ronojoy Banerjee caught up with him on the changing landscape of the IT sector. Here is an excerpt of that exclusive conversation.
I would say industry, possibly yes. And I'm talking about the industry because the amount of work potentially continues to reduce, the value of work goes up, and there is a reshaping of the total amount of work that any company needs to do. If that work actually is reducing, then the share of the work that goes to the industry obviously will be not growing at the same pace at a level of maturity that the industry has reached. However, that doesn't mean that everyone in the industry will therefore get to a similar lower growth. I think the winners and the losers in this journey is going to get segregated out. The average may go down.
So many winners,
there will be winners
of the past, may find themselves not winning anymore, and on
many
the
winners
losers
of the
list
past will continue to be winners. So if you have 20 people who are winning earlier and the industry growth rate was, let's say, 18%, 17%, the industry growth rate may actually come down to 11, 12%, and you'll have, amongst those 20, you'll have 5 who will continue to be great winners, and you may have 10 who are average, and you have 5 who are actually completely losing out. So the segregation of winners and losers is going to get far starker than it used to be.
Is the pie getting smaller?
The rate of growth of that pie is getting smaller if you define it as people. But that's true of everything in the world.
Right.
The number of people needed to do anything in today's world is lesser than it used to.
So therefore you're saying that because, again, indulge me, the IT and the outsourcing industry has been a big sort of employment generator for India. You don't see that sort of the growth forecast, the growth rates as far as the employment generation is concerned is not going to be as high as what we've traditionally seen.
So I don't know what the latest projection on those growth numbers are that the industry is giving, but I mean, if I were to do the projection, I would say the percentage addition of employees in that sector in India will not be the same as it was in the past.
Right.
Because there is artificial intelligence, there is machine learning, there is robotic automation, there is mobility solutions that get implemented in the field that actually makes back office and mid office work easier to do. So a bunch of those technologies will mean lesser work needs to be done because you've used technology to actually lessen the work that needs to be done. But the caliber of people needed is going to increase. The complexity of the work is going to change and increase. The infiltration of analytics and technology is going to increase. So all of that is good stuff. The skills of people actually has to go up. All of that is good news. If the expectation is that if the industry was adding 20% extra employment every year, I don't think that should be the expectation.
Because in the last financial year, talking about numbers and data, NASSCOM said that the industry hired 13% less than what it did in the previous financial year. Still, it's not as apocalyptic as as some may sort of lead us to believe. But you're saying going forward, the employment growth generation numbers will be on the lower side than what we've seen in the past.
Absolutely. Employment growth generation numbers, but remember, it is still employment growth generation.
Yeah.
And that's better than many other economies in the world where, you're talking about reduction in employment.
Okay, time for a break now.